My name's Alan Carter. I'm the president and CEO and founder of Cabral Gold. We have an advanced gold exploration project in northern Brazil called Cuiú Cuiú. It's right next door to the TZ project of G Mining, which just has a construction decision has been announced for that in the last few weeks, which will make that the third largest gold mine. We have the project next door. So far, we have 4 gold deposits identified. We've just updated the resource estimate, and the project has district scale potential.
Oh, good to see you. You've just updated the resource. What does that actually mean? Why are you doing that now?
Well, Matt, we earlier this year we announced that we filed an AIF, which is an annual information form, and we announced a prospectus-backed offering. And as a result of that, that has triggered the BC Securities Commission has advised us that we needed to update the resource estimate. As you know, the last time it was updated was in 2018. So that estimate is coming a little bit earlier than we had planned. Originally, we'd planned to do it at the end of this year, early next year, keep drilling to the end of the year. So it's a little bit earlier than normal. So that's the reason that we're updating it.
I was wondering, because if I look at some of the drill results you've been putting out since end of July, a lot of high-grade stuff going on there, decent intercepts. Is any of that in this update?
Some of it is, most of it's not. Certainly the drill updates, the drill results from MG and Central, the 2 known deposits that we knew about 2018, that's in there. But what is not in this resource estimate is anything regarding any of the results regarding Mashishi and PDM, which are the 2 new discoveries. So the primary material at PDM and everything that we know about the Mashishi complex, which actually looks like it's a collection of several adjacent deposits. None of that is actually included in this resource estimate. And the reason for that is because we just haven't got enough drill holes. Like I said, we were planning to keep drilling through to the end of the year, but we've had to update it, quite a lot earlier than we'd planned.
Okay, so I'll tell you what, give us the highlights of the resource update, and then I want to go from there. So what are we looking at? What do we now know?
So look, the indicated portion of the resource map has increased, or has almost quadrupled. It's increased by over 250% from 171,000 ounces, which we had in the indicated category. Previously, we've now got over 600,000 ounces in the indicated category. The inferred number has come down somewhat since a large chunk of the inferred material from last time is now indicated. There was a very, very good conversion rate. As you know, when you convert inferred to indicated, you frequently lose ounces. We've actually converted virtually all of that inferred material. We still do have a significant indicated resource of well over 500,000 ounces. So the global resource, when you add the indicated and inferred, has gone up by about 20% or so. We've also got a significant amount, well over 200,000 ounces of oxide material, and that is near surface, heap leachable, free digging material within the three blankets that we've got. I think there's a lot of upside from that. I think what's significant is that, as I said earlier, is what's not in the resource in terms of Mashishi and PDM, but the deposits that are in the resource, principally MG and Central, are all open along strike and down dip. So lots of potential to add ounces in the near future.
Right. Okay. So I want a sense of how you manage this through what is quite turbulent times, turbulent markets, risk-off attitude from investors across the board. Which is, we've talked in the past about these oxide blankets. You're telling me 200,000 ounces. Is that enough to kind of get going? How much more would you need to add to that to actually contemplate putting a heap leachable first project together? Because that is potentially cash generative, which allows you to develop the district. That's what we've talked about. So how far away are we from that?
I think we're getting pretty close, Matt. It's way more than we would need to start a initial heap leach operation on that. As you're aware, we are doing quite a lot of scoping work, internal scoping work, engineering work. We're doing mine sequence planning and all sorts of stuff, which should lead to a PA later this year, 43101 compliant PA. We haven't actually selected the engineering firm yet, but we're doing a lot of work internally using various local engineering firms in Brazil on demonstrating the economic viability of those blankets. So it's a really good start. I think there's a lot more there, and significantly there's quite a lot of high grade material, which unfortunately now the rules have changed regarding the reporting of resources. You can't actually put in the sensitivity graphs, which give you some idea of how much higher grade material might be might be in there. But there is a significant amount of high-grade material that we think we can get at pretty quick.
Right, and what are you trying to work out? Because obviously you kind of got this kind of lower grade, more homogeneous gold in there, and then you kind of got these some super high grade stuff in there, which is 60 grams over 1 meter. You got 12 grams over 6 meters. How does that work in terms of the recoveries for that? And are the oxides a little bit more homogeneous, or?
Yeah, the oxide material is mainly weathered material that is weathered from the underlying primary deposits. There's a lot more gold in the underlying primary deposits. So this oxide, but the nice thing about this oxide material is at surface and it's free digging. So the mining, both the mining and the processing cost of this oxide material should be very, very low. Now, because of the weathering, there is most of this material is fairly homogeneous. I mean, I think the average grade that we put out in the resource on this blanket material is 0.5 gram, which is way more than the cutoff. Now, that doesn't sound very high, but when you consider how low the mining and processing costs for this material are, it's quite significantly above what the cutoff grade is. I think the cutoff that we use for, or the SLR used for the resource estimate on the oxide was about 0.13 grams. But there is a lot of material that's well above a gram here. We don't, as I said, I think everything above 0.13 will be economic. But there's a lot of this material. We've got more than enough than we need to start, Matt. So there is a high-grade core to it. Several grams. There are the occasional high-grade hits, as you've talked about. But I think it's going to be pretty exciting. And that looking at this oxide material obviously gives us the opportunity to get into a production relatively quickly. We don't expect the capital cost for this heap leach type operation will be very high at all. And it's something that we think we could fast track into production very, very quickly. Right.
Okay. So I'm going to stick on this because this is what people are honing in on. Is how does this thing not become a money pit, as it were? So the 200,000 ounces, you're saying that's enough for you. What type of fund? More than enough is what you were saying. But you're biased. So, but if I'm looking at, if I'm talking to people who are going to finance this thing, 200,000 seems, a bit on the low side. I would have thought for a surety. So if things go wrong, will I get my money back and all of that? So what type of finance would you be looking for to be able to get that capex to allow you to kind of at least extract the value from the heap leach operation?
We're looking at all types of finance, Matt. We've probably got about a dozen conversations going on. They're early stage conversations with potential funders for this. So we're looking at things from streams, royalties, basically debt, combination of debt and equity. So I think all options are on the table right now. I think you've got to remember that the big prize, the main prize here, is the multi-million ounce potential of this district. Which
absolutely, I do. It is a district, and I'm going to let you explain that. But I've got to be kind of cold and hard about this one, which is exploration companies, by definition, are trying to find stuff. They need money to do that, and they keep drilling and they keep drilling. And there's us poor little retail investors, worry about dilution and
right.
Does the share price go up or not? Right.
Me too.
So you've said to me, you're a big shareholder, right? But
I'm the biggest.
You are. But you said to me, this oxide is the solution for that. So I've got to say, well, can you get it financed? How much do you think you're going to need? And what's it actually going to be able to do for you in terms of delivering the big prize, which is the district? And as I've said to you many times before, when people say, we've got a district here, I go, you've got a massive liability, which you've got to fund. So tell me how you work your way through all of that.
Well, Matt, look, this oxide material, we know from similar sized operations that the capital cost for this type of approach is very, very low. Consider there's no drilling or blasting, right? So this material is soft, basically mud. So what we need to do with that is we need an excavator, probably on contract, almost certainly contract, and a few trucks to truck this material 2, 3, 4, 5 kilometers to an agglomeration plant. What's an agglomeration plant? It's basically a giant cement mixer. You add cement, you form these little pellets of that mud with a little bit of cement in it, and that gives it some competency. So you get these little balls of material. It goes up a conveyor, a mobile conveyor, and then it's stacked on a heap, and it's leached. The solution is then collected at the base of the heap through a pond, and then it's fed through a small little electro-winning circuit which strips out the gold from solution using carbon electrodes. Essentially, that's the process. It's not intensely capital intensive. We don't require drilling and blasting. We don't require huge mills. You go to most gold mines have massive crushers, several stage crushing, and then these huge big rod mills or ball mills that mill this material. Massive expense building that and operating that type of stuff. We don't need any of that, right? So the capital cost on this material is going to be extremely low. How low, I cannot comment right now. But I can tell you that both the mining and processing, as I said, should be very, very low. And it should be, we expect that it will be, compelling in terms of the economics. But I don't have the numbers for you right now. The reason we're doing this, Matt, just again, is to actually get off this hamster wheel. And that hamster wheel is drilling, raising money, diluting, drilling, raising money, diluting. It's not good for retail investors. It's not good for me because so far I've put $1.8 million of my own money into this company. So we want to get off that hamster wheel, particularly as the markets are depressed, so that we're not dependent on continually having to go back to the market to raise more capital. But look, this is going to be relatively modest to start with. This isn't something that's going to be cranking out hundreds of thousands of ounces. I mean, you asked me, is 200,000 ounces enough? It's actually significantly more than that. It's about 230,000 ounces. So, for example, that would support an operation doing 30,000 ounces a year just from the heap leach. And that is just step one. The bigger prize here is to actually demonstrate that we've got something significantly larger than that, which we clearly do from this current resource estimate. There's about 900,000 ounces of gold now in the primary hard material, which will require a mill, and that's step one. And that number's only going to grow. So, look, we're extremely excited as a management team by the prospect of getting in production very quickly, very cheaply, generating some significant cash that will actually allow us to self-fund and do this district justice. It's got, we've got almost 50 targets now outside the known 4 deposits. We've got some great drill holes, as you alluded to in your introduction, with some very high-grade results at these 2 new discoveries at PDM and Mashishi, which are not in this resource estimate. So the global resource area is only going to keep growing. And this whole idea about production is advancing very, very quickly.
Right. Well, okay. I hear all of that. But again, I'm going to stick with this. There's 2 things going on here. One, which is, can you get this financed off the back of a PEA? We've seen some companies do it.
Yeah.
And for some it's worked, for some it hasn't, right? Depending on the complexity of what they're doing. Yours seems a relatively simple process. And, can you persuade financiers to do that off the back of a PEA? And then with regards to the cash, if all goes well and it does start throwing off cash, whether it be at 30,000 ounces a year or whatever number you end up at, is what does that do for you? How do you spend that money? Because you've got to, one, continue to deliver more oxide ounces, because that's a nice cash machine, and 2, then you do have to expand and get into the rest of the district. Maybe deliver more of these high grade results that we're seeing. So what's the plan?
Yeah,
for all of those things.
Good question. Look, as you alluded to, there are a number of other companies, public companies and private companies, that have financed small operations akin to this off the back of a PEA, and I believe we can do that here. I can't guarantee anything. We don't have any numbers out in terms of capex, opex, or anything like that. But my personal opinion is that we can, but I cannot make any guarantees. I can tell you that with a dozen or so groups that have expressed interest in financing this, and nobody is going to say yes until they've seen all of the details and we've got all of the numbers out. But we're starting the conversation with those potential financiers now, so that we understand exactly what they need to get to an investment decision in us. So what we don't want to do is spend the next 3 or 4 months thinking that we've got all the ducks in a row and answered all the various questions, and then for a financier to come back and say, well, actually, no, you forgot, you need this, you need that, and you need this for them to get to comfortable with an investment decision. So we're starting those conversations now. The second part of your question, which was, what was the second part of your question? I forget.
Well, it's really, my questions
help me out.
Ramble a bit occasionally. So basically it was saying, so what you've got to then keep adding oxide ounces just to keep that money machine going, right? Then, which costs money, okay?
But
a little bit.
Oh, good question. Okay.
The big question was, what do you then do with the rest of the district in terms of that cash contribution? Because now we're in a kind of non-dilutive environment, presumably, right?
Right. Let's talk about adding oxide ounces. Don't forget, this oxide material is at surface, is in unconsolidated material up to 50 meters thick. So you can drill multiple holes through this stuff in a single day. We should get several holes per day, and the drilling is very, very cheap. We don't need some big diamond rig that's going to cost us hundreds and hundreds of dollars a meters. We should be able to add additional oxide ounces very, very quickly and very, very cheaply. And we already can see there's a lot more oxide material here than the current resource reflects. For example, there's no oxides currently in the resource at Mashishi. There's a lot of oxide mineralization at Mashishi, but it needs more drilling. So that actually should not take a lot of money. The bulk of the anticipated profit from the heap leach will go into diamond drilling of the primary material and just finding out just how many ounces are in that primary unweathered hard rock below the oxide material, and what that looks like in terms of how much money we spend on that. I cannot say right now, but obviously it will be significant. As you correctly alluded to, having a whole district, and people band the word around district very loosely in this industry, and we've talked about this before. Anybody with a large land position generally said, oh, I've got a district. Well, hang on a second. A district to me means you've got multiple deposits. We currently have 4 with 2 new discoveries that aren't in the current resource. And surrounding that, we've got about 43, 45 targets. And I don't mean some target with a red line on a map. I mean a target with drill holes with gold intercepts in it, or gold veins sticking out of the ground where we've got great channel samples across those veins in situ, or high-grade boulders. That's a target for me. This is a true district, Matt, but we need to find a funding mechanism for funding it, because, to be honest, keeping drilling, diluting, going back to the market is not I don't think it's an approach which is sustainable, because we've got no control over what happens with the market conditions. As you know, right now, exploration companies aren't in vogue. We all recognize there's lots of upside, but we need to find a better way of funding and ensuring that we're advancing our project and frankly, going back to the market, particularly in times when times are tough and share prices are all depressed and everybody hates junior exploration companies, is not a viable way of progressing, in my opinion.
It's not. Well, let's talk about what you do, what you've decided to do in terms of managing that environment and managing your cash, which is you said at PDM and Mashishi that you haven't drilled enough holes yet to be able to include those in any kind of resource update. Right. And how much more drilling is needed at both of those projects to allow you to kind of bring those numbers in?
We're looking at that right now. I mean, as a broad guide, I would say about 10,000 meters split between the two. Don't forget, we've already got quite a lot of drill holes, and we've still got even more results coming out on Mashishi that have been somewhat delayed. But so look for a few more results at Mashishi. But round about that. Now, I may be off. Don't string me up if it's 12,000 or 15,000 or 2,000 meters. I mean, but that just sort of like broad ballpark gives you some sort of idea to get to inferred resources at both Mashishi and PDM. But again, and this is really important. The Mashishi discovery has basically 4 areas in it. The main area is an east-west trending zone that we've traced for 900 meters along strike, right? And there's not a single ounce in the current resource that we put out today that is included in that. The PDM has 2 parallel zones that we've traced each for about 400 meters. And so there's almost certainly an awful lot of ounces in both of those deposits, but they need a little bit more work. But this isn't going to take, and I think this is important to realize, this isn't going to take another 4 years to get a resource on these things. This is probably going to take 6 months, something like that, if we if we can raise sufficient capital to keep drilling. And the question is, well, are we going to do that now through another equity issue, or are we going to wait until we're in production and then self-fund it?
Because it kind of feels to me like you've got a couple of choices there, which is, you persuade the market, look at all these high grade work that we've done recently. We want to do more of that. We'll come out of this cycle and it's all going to be golden. Or you double down on the oxide blanket component, as small as it may be, raise some expensive money, as in it will seem expensive now until you get rid of it or refinance it out, in which case it stops becoming expensive, and you show that there's a kind of non-dilutive component to the story going forward, which may lend comfort to the market, may lend comfort to for future equity raises and any other kind of capital that you may look to. So where's your head at, or is it just constant assessment of what's going on a daily basis in the market?
Well, look, as I said earlier, our strong interest and a very high priority for us is to demonstrate the economic viability of this oxide material. Why? Because it allows us to step off that hamster wheel so that we're not continually going back to the market every year, diluting. And as I said earlier, I'm the biggest shareholder in this company. I've got
no, but my question wasn't that. Alan, my question wasn't that. My question was around what do you prioritize first? You've got all this potential, which you're starting to show through the drill bit, with the high grade results are coming back, and then you've got this real quick win. So you can either run them in parallel, or you can pick which child you prefer. So what are you going to do?
Matt, the answer to that is, look, we're going to focus on both of these objectives. We're advancing in parallel. The priority for us in the short term, and that is over the next 6 months, really is to demonstrate the economic viability of these oxide blankets for the reasons we've already discussed. That's the priority, but obviously having two new discoveries there, which are sort of half drilled out, which currently don't have a resource on, there's a quick win to be added there too. And how fast we do that is really dependent on access to capital. That's the key constraint in terms of defining the resources at Mashishi and PDM. But look, we as a team are extremely excited about the possibility of advancing these oxide deposits into production in the short term. I mean, it's, as you know, it's pretty unusual for an exploration company to have that opportunity, and we've got a lot of this oxide material. So it's going to be quite interesting, next 6 to 12 months for us.
Brilliant. Well, but I guess the market's going to say, well, if the PEA is coming out this side of Christmas or shortly after Christmas, that's the moment at which decisions get made. I think that is what I'm looking to, and maybe others will be too. So appreciate the update, Alan. Stay in touch and let us know how you get on, okay?
Thanks, Matt. Will do.